Good evening, everyone. It's great to be here with the best of Team Greece in economy and business, and Team Greece old, new, and hopefully prospective friends. I'm Elizabeth Eleftheriadis. I'm a lawyer with KG Law Firm. I'm very honored to be moderating an exceptional panel of experts who are very dear to my heart as a transactional lawyer in Greece, as all our panelists are in the deal-making business, risk-making, risk-taking, risk-managing, and deal-making business, as I said, making our world go round. Our panel's theme, the domestic institutional investors' viewpoint of Greek economy and its opportunities, has been a staple of Capital Link Forum for the last years. The focus of this panel has rather also consistently been SMEs and startups from the insider's viewpoint. SMEs, quite obviously, because SMEs are 98% of Greek businesses. Startups, I would say that as Greece has been a late adopter, but as always is the case with Greece, a rather passionate one, it has produced already some very interesting stories that we're about to share. Our insiders are from the private equity side of business, also from the REO, risk management and risk assessment business. So I have the pleasure of introducing on my left, Mr. Koulis, Mr. Nikos Koulis, CEO of and partner of Teka Investments, Mr. Takis Solomos, founder and partner of Elkonos Capital and First Athens, Mrs. Eleni Bathianaki, partner and partner of EOS Capital Partners, Mr. George Georgakopoulos of Intrum, and Mr. John Gikopoulos of Qualco. So as we are under, as we said, pressure, let me start with our questions from to our first panelist. So we've heard a lot about Greece being the place to be, Greece not having had the opportunity of a lot of institutional investors the last years. So starting from you, have you just been patriotic about Greece? Why Greece? What has been your experience? And what are the competitive advantages of Greece from a private equity fund point of view?
Thank you, Lisa. No, we are patriotic on other things, not with our investors' money. The reasons we like investing in Greece, and we are raising a second fund, in fact, is because there is a very favorable imbalance between supply and demand. Let me explain what I mean. SME companies, there were, out of the 100 SMEs companies in 2009, about 55% of them folded during the 10, 11 years of the major crisis. So the ones that survived had to be leaner, meaner, more efficient, basically fundamentally better companies. So that's the one thing. The second is that there is a change in the management style and perhaps the generational management. People realize that you cannot be efficient, effective, and a successful company if you focus in Greece. You need to be successful internationally. This might be in certain industries, Europe-wide, some others by the nature of the business need to be successful on a global scale. And this means they need capital and they need advice and know-how, which is what we provide. Us and other companies like us provide. So you have good fundamentals, you have good management, and we're also fortunate to have what is probably the most pro-business, pro-common sense, I would say, government in the last at least 20 years, and hopefully more years if they continue doing well. And this is not partisan. I would be delighted to have a government from a different party be as good, but for the time being, this is an excellent government and has solved a lot of problems and make life easier. So we have a benign environment, we have a good management team, and we have good companies that want to go and participate. So that's very attractive on the supply side. Now, the demand side, we are three groups, three private equity firms that specialize on the SMEs. Of course, there are CVCs of the world which are great, but focus on much larger companies than we do. I strongly believe that could be not 3 but 10 of us and still have good business. So, in a way, I feel like what Warren Buffett once said in a great year, that he felt like a child in a candy store. That's the way we feel. We believe there are very good opportunities, and of course we have to do our work right, but it's a great opportunity to go and invest in good companies and attractive valuations, do the value creation, which is an important part of what we do, and then hopefully sell them in a price will be much better for our shareholders. And by the way, in addition to maximizing shareholder value, I'm the old school, that's what I want to do, we generate a lot of good for the local economies and the people and the laborers. That's it.
And how about the competitive advantages of Greece vis-a-vis other countries of the region? Do you think we have anything particular? We heard about logistics centers, we heard about talent, we heard about new technologies.
This is sector specific. I don't think Greece is sort of better than anybody else in everything, but in some areas there are. We have invested, for instance, in a company that processes tomato in Thessaly. For some reason, I have no idea why. The plain of Thessaly has an advantage for the production of this crop, and has no reason not to become number 1 in Europe. And by the way, Europe has about 15% deficit in the production of this. So this is an advantage, sustainable advantage. But and as I mentioned earlier in a comment that I made, Greece has very good electrical engineers that are actually paid a lot less than others. So yes, there are advantages, but the fact of the matter is that you can be very specific. You can look at specific sectors and companies. We look both from a top-down and bottom-up and see sectors that we want to invest, but also opportunities where you have to be in our business. You have to be both systematic and opportunist. And I'm not suggesting that Greece is, as I mentioned, has great advantage. It has great advantage in certain sectors, and these are the ones that we're going to focus on.
Okay, so that gives us a good opportunity to move on to Takis Solomos. So Takis has been in the private equity business since 1998, I believe. So since we're talking about sectors, is there some specific sector that you believe has attracted your attention? You believe there's specific interest for it in Greece?
Look, we have been living in a country that, Lisa, that have been going through a major economic crisis for the last, since 2008, and where we're about to get out of the crisis, the COVID, and then the Ukrainian war happened, so nobody really knows how the economy is going to evolve. So Greeks have proven that they are resilient. So there are many industries that have managed to grow, have managed to become competitors in a global scale, have managed really to get rid of the locally produced problems and expand it in other areas and other markets and other goods and services. In our portfolio, we have a lot of, attention to the food and beverage companies. Out of our invested capital, around 80% is invested in this type of companies. We are fortunate enough to be in a country that is perceived in the Western world as a top cuisine, let's say. So the Greek brand, in terms of food, is recognized, and people, given logical, let's say, price, let's say, differentiations from other markets, they prefer to consume Greek products. However, we need a lot of work in terms of branding, the things that we all know, that we need to make stronger brands and companies with wider distribution, globally. So in our portfolio, we have understood that the food companies, are resilient to crisis. This is a characteristic of food companies globally. People have to eat, have to consume specific number of calories, a day to survive. I consume more than that, obviously, but this is something that I manage to do it. And so our companies have managed to become more export-oriented, have managed to invest more in research and development of new products. Food is evolving as everything else, so we see all these new proteins, the new, let's say, dietary trends that leads to people to want to consume different things. But fortunately enough, the Greek entrepreneurs in this sector are quite, let's say, active in the research and development side of the equation. They do a lot of things to try to export their goods and services. They try to put the brands, given the circumstances, in a wider audience in other markets. And we see that the food sector in Greece, given the changes with the COVID that made, let's say, the locally produced foodstuffs more important than they used to be before the disturbance of the supply chains due to COVID. I do feel that there is an area that is going to attract even more investment in Greece. Of course, there are the problems of the geography. Greece is a small country, a lot of mountains, a lot of islands, so we don't have that space to grow too many stuff, but we need to move forward to the value-added products and the more branding, the more flavor, let's say, side of the equation.
Mm-hmm. Great. So talking about prospects, Eleni, how was 2021 for EOS Capital Partners, and what do you see from your experience 2021 as an outlook for 2022?
Okay. Thank you very much. Thank you for being here. Lisa, for us, and I will continue this optimistic, nice environment, 2021 has been a good year. Obviously, as Nikos and Takis already explained, we invest in growth SMEs. That effectively means that these are good companies with a solid financial position, that belong to defensive sectors with competitive advantages, either in terms to their product or their service, or they do something differently. That effectively means that even within the pandemic risk, these companies managed to do well. In some cases, actually, they managed to tap market share. They increased their revenues. And within this environment, EOS continued its investment strategy, and we continued investing. We have made 6 investments and 1 divestment in 2021 altogether. And actually, this is a very nice case study to say. In 2021, we did our first divestment, a typical Greek SME that actually we invested 22 months ago in October 2021. Located in Crete with revenues of 35 million and approximately 3 million of EBITDA, very strong management team. The revenues already coming 40% approximately from digital sales. The company belonged in a defensive sector, athleisure. That meant that it increased globally by more than 6%. They managed within the 20 months of our journey together, 22 months of our journey together, to triple their physical location, almost double their revenues, tripled their EBITDA. And in May 2021, we got approached by an international strategic investor, JD Sports. Most probably you know Finish Line, most people here in the US. I think it's the global #1 retailer in athleisure. We got approached by them for a majority sale. The deal concluded in October 2021. What is amazing, other than the very high returns that the family and the fund got, is the fact that they asked the family to retain a 20% stake. This effectively meant that there was a seal of approval to the management and what they have done so far. And Greece will actually play the role of the hub for the regional expansion in Africa or Middle East. So despite all the uncertainty, and of course, it's nice to say the nice case studies after they have been made. There were months during the lockdown that we were all really scared, and we tried to stay very close to our companies. I think one of the things that all the investee companies have seen, and the whole environment have seen, is how important it is to have capital buffer. Because during the challenging times, it is really important for the CEOs to retain focus in their balance sheets and their business plans and their strategy. So this was something good that came out of this crisis. So we remain focused on this, and as we have said many times, we are pari passu investors. So even if things go bad, we are all in this ship together, and this is something that we really say to our investee companies. Now, what this means in 2022, to be honest with you, I feel I feel stressed because I know that there's going to be pressure on the margins. I'm not sure how the companies will be able to transfer the increased inflation rates and all these energy costs, increased energy costs, wages to the end consumer. But as a private equity fund, I see some good things. Number one is I think valuations are going to be a little bit more rational because 2021 has boosted a lot the valuation levels. And also, I think, as I said before, the importance of having capital buffer and having a strong financial investor in your capital structure does not mean that you really need to feel threatened, but on the opposite side, you can remain focused on your strategy.
Okay, so before moving on to the other panel members and staying at the private equity level, so you mentioned something about capital buffer and other synergies possibly with other investors. So who would the investors typically be? Would they be other Greek PEs? Would they be international private equity funds? So
well, actually, we have already cooperated among us. We have an investment in Minerva, and then we have Euro Catering. We have announced a cooperation with a strategic investor for years within the next month. And obviously, when you want to have like a majority buyout, you need cooperation. It's really good to actually diversify even your risk. And I think among the Greek private equities, we have already depicted this synergy. Now, with regards to international PEs, obviously, Mr. Fotakidis, we are here to help with smaller tickets, obviously, but it would be great because I think what the Greek PEs can provide is local knowledge. We do have, a good understanding of what's happening and how we can help. So I think this is a natural, let's say, wedding and synergy of forces. And obviously for us, the international PEs is like the natural exit. I mean, what we really want is our SMEs to grow enough in order to be attracted by international players, either strategic or financial.
And one last question on the PE side again. So we heard about athleisure, which is a non-obvious, let's say, business sector. We heard about agriculture. Any other sectors that you attracted your attention at least the last year that were, let's say, not that obvious for investors?
We have invested. Sorry, I'm just going. We have invested already in cybersecurity, which is not like a normal or like a usual case in Greece. The company is called Umbrella. It's an amazing team. Recently, actually, they almost doubled the size by acquiring the #1 competitor in Greece, called Encode. It's a defense sector growing globally. We do expect a huge growth potential for them. So this was something that you wouldn't expect to have like #1 in their sectors.
And we had a bunch of companies, obviously being slightly older fund. The one that attracted the greatest publicity was Viva Wallet that was bought by JP Morgan. We had a Times Money, a double-digit Times Money. We also have a generic drugs company we expect to announce within the next several months. That's also going to be quite attractive. Some of the food companies, and the next fund will have business services, technology, food and beverage.
So reasonably diversified portfolio across
Greece is too small a country to have a fund that specializes in Greece and then a specific sector. You need to be more broadly based.
So jumping from private equity to, well, we heard something about fintech, et cetera, so maybe that gives us a good opportunity to move to Mr. Gikopoulos, CIO of Qualco. So during the COVID, it was heard that 2030 happened in 2020, meaning the acceleration, the digital acceleration that we were expecting for 2030 happened 10 years ahead. So does this mean that Greek SMEs became more IT-minded? What's your experience, and what's your view for the market and the solutions that are proposed?
Well, over and above so first of all, thank you very much for the opportunity to speak to this audience. The acceleration from COVID was part of the tectonic shift that we have been witnessing in Greece during the last 2 years within the technology sector, right? And I think that other panelists spoke about the technology sector as an opportunity. I happen to believe that it's one of the biggest opportunities for domestic and international investors on the back of 3 core reasons. One, yes, COVID as a catalyst, or disease as a catalyst, as unfortunate as it might be, has accelerated the way that companies across the board are willing to adopt new technologies. I think that's one. But at the same time, we've had a double whammy situation where Greece actually had to go through a huge shift in their typical ways of working due to the crisis. So if you put one and one together, the resulting impetus was pretty much unique at a global scale, and that is one. Secondly, what is happening and what is quite evident across the board is the fact that an ecosystem has been forming across education, research, the public sector, and the corporate entities active in the country that is actually able to act as a multiplier of what technology companies can do in this country. I mean, I don't need to remind this to everybody, but the reason why Silicon Valley is so successful is not, well, it's not just because of the location or the weather. It's because it's so much easier to do business when you've just left, the Google office, and your best friend has just left the Amazon office, and your boyfriend has, just left the Microsoft office. So I hope that by being able to harness all this talent that has been gathering up, this is a distinctive attribute of the Greek technology sector. Third and finally, and I think Mr. Athanasiou would probably agree with me on this, location, right? So Greece is pretty much at a global junction where we have the ability to serve both Asia and the Americas over a certain overlap of time. Secondly, and this is critical, both to the millennial generation, but much more so to Generation Z at this point in time, having the ability to offer local and global talent the chance to work out of a Greek island, the chance to work close to the Greek nature is unprecedented. There's very, very few countries that can actually have this claim to fame. So if you combine all of the above, huge opportunity. The bones are good, the fundamentals are good, and the technology sector in Greece is going to have, it's time in the sun, it's coming.
Okay, so since we talked about technology, now the last point that we haven't covered is NPL management and debt collection, and enforcement, which is covered by George Georgakopoulos. We heard so much about NPLs in the previous panels. I think it's almost too easy to ask. So what's your view on NPLs? What's the progress made so far? What are the opportunities you see? And which sector, maybe, out of the NPLs that NPL scenarios that are managed by? Yeah.
Thank you, Elizabeth, and thank you to Capital Link for pulling the conference together. I think it's great service to the market, and we are thankful to Nikos and his sister who are pulling this together for many years. Now, the reason I think, Elizabeth, that NPLs were so much discussed in the last few sessions, I think is the sheer size of it compared to the local economy. So I think it's 100 billion done by servicers, and we are one of those. We have about 30 billion ourselves GBV that we manage, and a few billion real estate on top of that. But the whole market has 100 billion plus another 10, 20, 120 in an economy that is less than 200 billion. So it is very, very substantive numbers. That's why people are talking about them. The thing is that, you see, when companies come to our portfolios and our management, they do not look like the companies that Eleni and Nikos and Takis said earlier on they would like to invest into, because they do not have strong balance sheets. They do not have strong propositions. They do not have strong management. At least they do not have some of those three elements combined. So the job is, and what we're trying to do is trying to start addressing those. The relatively easy part that we do is to try to fix the balance sheet for them, at least on the debt part, and the structuring the debt. And the expertise that ourselves and companies like ourselves do have in Greece is second to none. The sort of restructurings we do, fixing balance sheets, etc., in the rest of Europe, whenever it is done by specialist credit funds. It's not done by servicers. So we have developed exceptional expertise in doing that part, fixing balance sheets. But over time now, having done tens of billions of restructurings by now, so restructuring the financial debt to start with, you see that that's not adequate from some point on. What you need from some point on is to work further to make those companies attractive, to work further on management, on process, on governance, on making and finding capital investments for them to make their products more interesting and more competitive, which is a hard part. Now, we have embarked into those kind of activities more actively recently. And as an example, we have put out in the market for sale, that's in Greece, that is, of about the loans, that is, of about 75 hotels. Why have we done that? Because when you look at those cases of those hotels, for example, they're medium-sized hotels, let's say 4,500, 5,000 rooms in total. The issue is that when you look at those businesses, is that they're simply not competitive enough. The proposition is not competitive enough. They need more investment. They need more capital investment to make the hotels more attractive. They need access to better management. They need access to markets and so on and so forth. So how you solve it? We said, let's put a good package of loans together and try to attract strategic and financial, but strategic primarily investors who are going to turn those around to make the proposition attractive, the hotel proposition, the hospitality proposition. And it has started very well. So I think it has great interest. I think it will work out nicely and will be successful. Everything we see so far suggests it will be very successful. Now, as soon as we see that this is working well, our plan is to get into other sectors. And we have a number of those that we think are quite exciting. A second one is food industry. And quite extensively, we happen to have almost 1 billion exposures ourselves in that kind of business. These are functioning businesses, by the way. They have customers, they have employees, et cetera, et cetera. So the next one, I think, that could be very exciting and we'll focus on as soon as we're done with the hotels is the food industry. But there are more. I think there is a further significant opportunity, and we'll put effort behind it in logistics. We'll try to see how we can restructure parts of the sector, via our actions. And finally, I would see real estate. Those 100 billion of NPEs that the servicing industry only is managing will naturally create multi-billion real estate. And the real estate would be an exciting and very interesting opportunity for the Greek market and investors into the Greek market. First of all, it's the first time it will be available at scale, because until today, you cannot go and invest residential real estate and say, I want to have 500 million residential real estate. May I have it? No, you may not have it, because it does not exist. But soon it will exist, because we will put it out in the market, we and other servicers. If you think that the prices today in this market are relatively low, the supply will be quite substantive, and the opportunity to participate in the market via transactions at scale with us and the likes of us will be there. I think this would represent interesting, exciting opportunity. Therefore, what drives opportunity is two things. One is the size of the NPL portfolios that we and the likes of us manage in this market. Secondly, the point that we are where the financial structuring is not anymore adequate. The need and the opportunity to invest capital-wise in whole sectors, for one. This is businesses that are functioning businesses. And finally, the opportunity to invest at scale into real estate, where still the prices are very attractive.
Okay, so we've heard a lot about the opportunities, about the diversity of the supply opportunities. Let me go back to one of the staples of previous panels, domestic institutional investor panels. Obviously, there has been a lot of progress in the last years, but one of the questions that was typically made was, if you were granted a wish, what would you change in your economic, let's say in your business sector? What would you like to accelerate? What would you expect to further accelerate progress in your business sector? So starting with Nikos, who's...
I'll say exactly the same as I said 2 years ago and 4 years ago and 6 years ago. Acceleration of justice. You can't have a function. This government had great progress, but unless you have the ability to execute contracts in a timely fashion, you will always lag behind your competitors. This is a critical thing, and I'm not talking about 10, 20, 30%. I'm talking about a 50% acceleration on delivery of justice. This is my number 1, 2, and 3 wishes combined.
Well, on a more positive side, however, last year you were mentioning bureaucracy, delays, e-governance, etc. So this is all solved. So let's just have one thing for the future to check progress. So how about Taki?
Right. I would say that we need to initiate a much stronger connection between the universities of Greece and businesses. We need to try to create the connection, to try to bring the younger scientists closer to business, to address the needs of the industry, and in addition, providing to our students, the motivation to work in Greece and develop world-class technologies, products, and services. I think this is the challenging task that the current government needs to address, I would say, immediately, because there are all these trends in the traditional sectors, not only technology. As we're discussing, agribusiness, food sector, all this, they are going through a transformation process, and the universities and the research, let's say, institutions need to provide, real data and real, let's say, products to the industry.
As Dr. Boula mentioned with Aristotelou Panepistimiou. Eleni?
Well, I would like to, not to change, but improve maybe the culture. I would like to see the Greek companies being able to play the role of market consolidators. I would like that to be in their hands and not wait for an international fund or us or international strategic player, but be able to understand the economics and the synergies of uniting forces. Yeah. So it's a cultural thing. I think it's a matter of generation, and we already have some good news. But it's not always easy, and I think the three of us have realized that it takes too long to convince somebody, like a typical SME company, because most of the times we're still talking about family-owned companies that they lack this corporate structure. So changing, or actually improving, let's put it this way, using a more positive verb, improving the culture would be nice.
George, do you share the views of private equity funds?
I do, but if I may, I would add one more, and actually that is further support and acceleration to the transformation that actually the Minister of Justice, Mr. Tsiaras, is already helping us go through. A great piece of work for faster delivery of justice and oiling of the whole ecosystem infrastructure that has to do with the delivery of justice, for example, notaries and the likes. Ministry is doing an excellent job. It has started at least a year now. I would love to see them continuing that and getting us to a successful conclusion.
Okay, and the technology inside this viewpoint, what would you want to see change?
So literally in 2 seconds, right, and building on what Taki said, bringing the research and education side closer to the corporate side, being able to attract medium, large-scale corporates to the country, and through that provide the evidence, provide the breeding ground for more entrepreneurs and for more ideas to grow by leveraging, by getting to know how business is really done in practice. So for me, this bridge.
Okay, so thank you all very much. I don't know if there are any questions. I know we're very short of time, but just in case there's any questions in the...
No. We'll run out of time.
In the audience. Okay, great. Thank you very much. Thank you.